Feds have decided to cut interest rates again before the year's over. What does that mean for our 2025? You got the stock market, you got the housing market, as well as a new president coming in. So many things that could actually be impacted by this. The current interest rates that we are seeing for the housing market, usually it's this number that I look at here from this website. It's at 6.875. It is a little bit on the higher side. It's lower than where it peaked at about a year and a half ago. Almost 8%. With that move happening, I don't think it's going to create much movement in the housing market because it's just 0.25%. The basis point went from 4.5% to 4.25. It's not a big deal. I think it's when you start seeing like 2% cuts over a shorter period of time to stimulate the economy like they did back in 2021. That's when you start really seeing a huge difference. That might cause prices to surge. That might cause inflation. I still think inflation is still a worry. I don't think it's completely under control, and I'm going to explain why. Even they mentioning it here in this article, despite signs that inflation isn't entirely going away, we're still seeing people struggling. People's bank accounts are not that gloomy. I can tell you because as I'm working on trying to get this one unit rented, I'm seeing the savings. It's not quite there. Some people don't even have 1 month's worth of the rent to actually move in. Quite sad to see. And the people that do have the money, they don't have the necessary income. Take into consideration that where reality is versus where the news are trying to put things. I have foot on the ground right now, and I'm telling you exactly where I see people are struggling. It was not this bad the last time I had a unit that I was actually renting. People were much more in a more stable place within their financials. You got to think about all the stimulus that the government gave. People went and spent. They got comfortable in spending, not realizing that they should have been investing. For those of us, of course, that were smart enough to take that move and that route, we're feeling it, but not feeling it at that level and capacity. Like your asset prices might be booming right now. Retirement, investments account, crypto. Your income might have stayed stagnant across the past, I would say, 1.5 to 2 years, especially if you work in the tech sector. It's been a bit of a tougher market. Tech companies have definitely retracted back a bit. But I am seeing signs of life though. As the new president is coming in, been some enthusiasm in the market. And this started, I would say, probably right after the election. As soon as Trump got into office, he got elected, companies started posting more and more opportunities. There has to be a rebalance of, listen, the supply is here right now. The demand is here. And it's gotten closer within the past month. Now, the minute we get here, things are going to feel much more normalized. You're going to see less than 100 people applying for jobs. Eventually, as more roles are being posted and more roles are being added, now you're going to see even less people applying. And this is where I think it's going to create an economy for the recruiters. The recruiters right now, they're killing it because companies are stressed in terms of bringing people in. There's overloaded of amount of applicants that they're getting per job, and companies are not really dedicated to being the recruitment services. They don't do this thing very well. They want to focus on the core business instead of trying to bring somebody in. You might think you might be saving money, but the consultant, third party that really focus on this thing, they have a whole view on the market, the different trends and transactions. They do this. So you got to think about if there are so many people applying to roles and the company cannot handle the amount of applications and they're looking for good candidates and the people that they have internally cannot find those right candidates, they have to outsource it to bring that quality inside of the company. Now, if Trump comes in and putting a lot of these policies in play where companies are able to lend more, startups are going to be able to have more money, VCs are going to feel more comfortable in the money that they are lending out, you're going to start seeing another boom wave of the job market, especially in the tech sector, where things are going to get a bit out of hand again. There's going to be a shortage of people looking. On top of that, not enough people to actually do the work. And I think that's when we're going to start seeing salaries increase. Right now, peaks of salaries for someone that's not a director has reached $300K as a base. Bonus and all that stuff included. Of course, you got the Netflix that could be like at $700,000 because you came in at the company at a much earlier point. Then you had all this stocks. It's now valued at XY, especially like Netflix. I bought Netflix at $175. Now it's like almost $1,000, which is crazy, but great investment. As you hold on to those stocks, it's part of your total compensation. And that's how all this works. And I spoke to some of these companies too. Now, when it comes to your investments, your holdings, your retirement, regular, normal, ordinary investment account that you have, whether it's Robinhood, Charles Schwab's, E-Trade, those, I think you got to be very careful. I think we're at a point where now you definitely don't want to liquidate. Don't think the market is at an all-time high, because things could be crazier. There's still trillions of dollars sitting on the sideline that has not been invested, and they're sitting in those high yield savings accounts, ordinary people's accounts, checkings, probably sitting under people's mattresses. So you don't know sometimes where the splurge of money are just going to be dumped into the market and create this hype that happens. We might feel like we're at a peak, but it may not necessarily be, because remember, there's a lot of money that has been printed over the past couple of years, and we're not sure if all of it has been accounted for. And that's why you want to be always invested in the market, because it will keep up with inflation over time. For the short term, it may seem like there's a lot of fluctuation, but long term wise, the stock market will always keep up. If you don't have no idea what to invest in, definitely some mutual funds are great. You could look at the SP 500 index tracking funds. You could even look at, if you're more in the crypto side, Grayscale has the digital large capital fund. These are great opportunities for you to look into in terms of what's possible. In the technology space, there's ITYAX, and there's another overall fund supporting my black business is ARGFX, Ariel Mutual Funds. So those companies, I think, are good things to look into if you just want to be completely passive. And you could set it up on a recurring basis where every week, 2 weeks, month, this amount comes out of my account. No matter what the economy is doing, whatever the stock market is doing, I don't pay attention to it. That is the best investment strategy if you want to be completely passive. Me, I do a mix of both. I have times I enter the market with a lump sum of cash. I buy this, and there, and as things are going down, I keep buying more. So that's when I get a little bit more active. But I am passive in the sense of, I know when it's time to put money into the retirement. Usually I do it the following year, because you have until April 15th usually to put money into a retirement account to account for the previous year. Like, for example, the money I want to put into retirement for 2024, I have until April 15th of 2025 to place that money in there, as well as the HSA. Those are rules that the IRS has set up, so that way, yeah, you get a little bit of extra time to do that, and it counts towards your 2024 tax year. I would say max out your 401k when you see the market is down. Right now we're at a higher trend, so this is where you get less aggressive, and you can adjust it, but you probably don't have to if you've been completely hands-off passive. Keep the same thing coming in. It doesn't really affect anything at all. If the market goes down, that's when you want to be more aggressive, increase the percentage of the amount that you contributed in. That's how the whole investing game works. Don't time it, because no one ever gets that timing perfect. Now, another thing I want you to look into is investments elsewhere. Now, China is getting beat up, bruised. They're going through it. Part of the reasons is their real estate market. They were lending like crazy. People were getting loans for homes that were not completed. There was a trend of that. Whenever there's bad business that continues to keep happening, you're gonna get a pop that happens at some point. That's why things have to regulate again, normalize again, but it takes time. That's how life works. It will normalize itself over time if you just give it. So if anything is happening that is bad, that is crazy, just like with inflation, just like with the stock prices going crazy, and it's not really realistic, it's gonna eventually fluctuate back down and renormalize back to a normal pace. GoTo, Xpeng, Tao. These are all Chinese-based companies that I hold holdings of, and I'm just sitting there. Prices for these like drop maybe 90%. It's crazy. The reason I'm holding on to them because I think long-term they have a game plan that has to happen. They're an economy. I don't think they're going nowhere, because you got to look at China as a business. A lot of the things we have, we wear, the parts that we get from certain technology, it all comes from China. I don't think their economy is going anywhere. It's just parts of the economy went up crazy and now has to restabilize. The government is going to step in and probably do a couple things here and there. It's really the investors that are going to drive that. We're not going to see it happen overnight. It takes a bit of time. So if you're patient enough, I'm not telling you to invest these exact stocks I just mentioned. Look into the ones that you feel more confident. You got NIO. You got several other Chinese-based companies that I think have a promising future. We're going to have bumps and bruises along the way, but for the long term, I think it might benefit us all, because I don't think their economy is going to collapse to the point where the whole country blows away. That's the only way I see all this is going to zero. I just wanted to share this clip of Howard Marks here. He's part of Oak Tree Capital Management. Just listen to his theory for a second.
My bias is that they will. You know, many people in the investment community describe China as uninvestable. To me, that word is music to my ears. I've made my whole career buying assets that other people consider uninvestable, and when you do that, you have a chance of getting a bargain. So I think that clearly China is on the pile of things that people feel ill about, and it's on that pile that you find the bargains. That doesn't mean that you should buy everything on the pile, but that's where you look for the cast-offs and the bargains.
So there you have it. You heard what he said in terms of China. It's going through its turbulences, it's going through its patches of rough paths, but eventually it's gonna find its way. You just have to be patient enough, stay long enough, invested enough while it's finding its way, because you're gonna reap the rewards. It's just right now they're not looking good and everybody's running away. And those where the opportunities are made. Of course, you got to be careful, do your research to figure out which ones have the business model that can sustain, that has the ability to last through in 5-10 years, that I see is gonna really capitalize on a trend or a change inside of the market. For me, that's the educational space. That's go-to-Tao. Chinese policies made them turn to much more of a non-profit model, which I feel like they're going to capitalize on in the future, because education is not really going anywhere. And then you also have the EV space. Xpengs, they have the flying cars, regular cars, EVs. You got Neo, one of the leaders that was competing in that space. Think about that. Extract that in your mind next time you're investing. China is not the only one. There's other countries as well you could look into. But the idea is to really have certain diversifications in certain places where you see opportunities. If you see opportunities here, go there. Like for me, even the whole EV space is being battered right now across the board. I'm invested in Rivian, Lucid Motors. Nikola, I think, is done for, but you never know. I have some small stakes in there. Rivian, I feel much more confident about. But I think those were the opportunities in the long term or to be made. Not when it's all hyped up in the news, it's like, yes, I'm going to buy this right now. It's really when it's completely bleeding red is when I've seen the biggest return for me. You don't want to buy everything in red. Like he said, you got to do your due diligence. You may have half of them that fail and the other half that wins. But if you're diversified enough, you're not playing a gamble, then you're taking actual calculated risk. As the news is selling one thing about how the economy is great, jobs, unemployment is low, stock market is booming, don't fall for it, because in reality, people are struggling out here. They are really struggling, and I'm seeing it. And I'm doing the best I can to see how I can maneuver and shift. Things are not looking too great right now. We just got to stay consistent. I'm invested, of course. I'm not selling anything. And as opportunities come, I want to keep buying more and more investments and do what I got to do. But that's just the reality of where life is right now. I know the news is telling you one thing, but I'm bringing forth to you here what's happening with real estate. And I'm in the New York City region. It's real, y'all. It's definitely real. So I hope you found all this insightful. Definitely drop a comment if you have any questions for me. I will always be there to answer. Give this a thumbs up for me if you enjoyed the content. It also helps this video get to others that need to see this, or getting the falsified information from the news media that's selling things are great versus the reality of how things actually are. So peace and love, trust in Jesus. Have an amazing one.